Welcome back to Talk Tickers, where we really dig into these earnings calls, save you the time of having to go through them yourself. Today, we're going to be looking at Thermo Fisher Scientific's Q4 and full year 2024 results. And man, these guys are kind of the big dogs in the scientific instrument world. So their performance can be pretty telling for the whole industry.
Yeah, for sure. Like their results kind of give us a sneak peek into what's happening in the broader life sciences and healthcare world, like where things are headed.
Absolutely. So let's just jump right into the highlights. Revenue for Q4 came in at, $11.4 billion. That's a 5% increase compared to last year.
Not bad, not bad.
Yeah, and it's not just like some random growth either. This actually beat what a lot of the analysts were expecting.
Oh, really?
Yeah, so it seems like they're really outperforming, especially considering some people thought the market might be slowing down.
Yeah, I mean that's a good sign. Shows they're still capturing market share even when like the economy is being a bit unpredictable.
For sure. And their adjusted earnings per share, that also jumped up 8% to $6.10. So they're not just growing, they're doing it, in a profitable way.
Exactly. That's the key, right? Profitable growth. Gotta love that.
Absolutely. Now, Thermo Fisher isn't just some, one-trick pony, right?
Yeah.
They're spread across a bunch of different areas. We're talking pharma and biotech, academic and government, industrial and applied, and of course, diagnostics and healthcare.
Yeah, they've got their fingers in a lot of pies.
They do. And get this, they actually saw positive revenue growth in all of them.
Wow. Okay, so that really shows their reach. Like no matter what's happening in one particular area, they've got other areas to like balance it out.
Right, exactly. Shows how resilient they are. Now let's dive into some of the specific things that are driving this growth. First up, their commitment to innovation. They're always like pushing the boundaries and coming out with new stuff. Take the Stellar Mass Spectrometer, for example. This thing is a total game changer for clinical research. It lets scientists validate biomarker candidates way faster and with more precision.
I mean, that's incredible. Faster and more accurate results. That's like the holy grail for researchers.
Yeah, absolutely. And what I find interesting is that it really builds on their existing expertise in mass spectrometry. They're already like the leaders with their Orbitrap Astral, and now they're adding another powerful tool to their arsenal.
Yeah, they're definitely doubling down on what they're good at.
Mm-hmm. And it's not just about fancy high-tech gadgets either. They're also thinking about sustainability. They just came out with this bio-based film for their single-use technologies. It's made from, plant-based materials instead of those fossil fuels.
Oh, wow. Okay, so they're appealing to that eco-conscious customer base, which is like growing all the time, especially in biopharma.
Absolutely, yeah. Now, here's where things get really interesting. They've taken their contract development and manufacturing capabilities, CDMO, and they've combined that with their contract research organization expertise, so CRO. And they've created this thing called accelerator drug development.
Accelerator drug development. Okay, I'm listening. Tell me more about this.
So basically, it's like a one-stop shop for drug companies. They can go there, get the new therapies developed, get them manufactured, and all of this faster and more efficiently.
Okay, so they're streamlining the whole drug development process.
Exactly. And the feedback so far has been really positive. It's already bringing in new business. So this is something to keep an eye on.
Yeah, it seems like they're really good at finding those gaps in the market and then, coming up with solutions that really fit the need.
Yeah, for sure. And they're not afraid to invest in the future. Speaking of investments, let's talk about how they're managing their money. In 2024, they returned a whopping $4.6 billion to shareholders through dividends and those stock buybacks.
Whoa, okay. That's a pretty clear signal that they're committed to creating value for their investors. They're not just focused on growth, they're sharing the wealth.
Exactly. And they're doing it strategically. They're using their capital to acquire companies that complement their existing portfolio. Like think about the recent acquisition of Olink, the leader in proteomics research.
Right. So they're being smart about it, not just throwing money around, but actually choosing companies that will help them expand into new areas.
Exactly. Now, one thing that really sets Thermo Fisher apart, I think, is their commitment to operational excellence. They have this continuous improvement program called the PPI Business System. And get this, they're even integrating AI into it.
Oh, wow. AI. That's cutting edge.
It is. I mean, AI can help them streamline things, make their products even better, and even improve the customer experience. So they're really staying ahead of the curve.
Yeah, they're not resting on their laurels, that's for sure. They're always looking for ways to improve.
Okay, so before we wrap up this first part of our deep dive, I want to touch on something that sometimes gets overlooked, and that's their commitment to corporate social responsibility. They're really making strides in sustainability, reducing their environmental footprint, launching those greener products.
Yeah, and it's not just about being, environmentally friendly either. They're also working to improve health outcomes globally. Like, for example, they've partnered with the National Cancer Institute on a precision medicine trial. It's pretty huge.
It is, and they're also, they're fostering the next generation of scientists. They've got these STEM education programs that have reached over 180,000 students globally. So they're not just about profits. They're about making a difference.
Definitely. They're taking a holistic approach. They understand that their success is tied to the well-being of society and the planet as a whole.
Absolutely. All right, so we've covered a lot of ground here in this first part, but there's still more to explore. So stay tuned for part 2 of our deep dive into Thermo Fisher Scientific.
Okay, so we've talked about the big picture, right? Now let's zoom in a bit. Look at how those different parts of their business are actually doing.
Yeah, good idea. Kind of like peeking under the hood, seeing what's really driving their success.
Exactly. So let's start with Life Sciences Solutions. That's a big chunk of their business, and their revenue there, it grew by 5% in Q4. Respectable, right? But for the whole year, it actually dipped a bit, like 3%.
Okay. So not as strong as the quarter, but 3% isn't a huge drop.
Right, and it's important to remember they were up against some really tough comparisons to the year before. 2023 was a really good year for that part of their business.
Okay. So maybe not a huge cause for concern then.
Yeah, and plus, the whole industry, it wasn't growing as fast in 2024. But here's the good news. Their adjusted operating margin for Life Sciences Solutions, that actually went up to 36.6% in Q4. That's 40 basis points higher than last year.
Okay, but be honest. I don't really speak finance. What does that actually mean? Like for normal people?
Basically, it means they're getting more efficient, right? They're making more profit from the revenue they bring in.
Got it. So more bang for their buck.
Exactly. All right, now let's look at analytical instruments. This segment had a really good quarter. Revenue jumped 7%, and organic growth, that was even better, at 8%. Their electron microscopy business and chromatography and mass spectrometry, those are really doing well.
Yeah, those are some pretty specialized tools, right?
Yeah, but they're in high demand. Think about it. Everything from materials science to environmental monitoring, all that stuff needs these high-tech instruments. And Thermo Fisher, they're one of the big players in that space.
Right. Makes sense. And their full-year performance for analytical instruments was solid, too. Both reported and organic revenue up 3%. And profitability was good, too, right?
Oh, yeah, for sure. Adjusted operating margin for that segment, that jumped 170 basis points to 30.5% in Q4.
Whoa, okay. So another big jump there.
It all comes back to, efficiency. They're managing their costs well, and they're getting those economies of scale. It's like a well-oiled machine.
I like that analogy. Okay, so we've covered 2 segments. What's next?
Specialty diagnostics. That's another big one for them. And this segment, it saw 5% growth in both reported and organic revenue for Q4. Their transplant diagnostics, immunodiagnostics businesses, and the healthcare market channel, those were the big winners.
Transplant diagnostics, that sounds pretty important.
Oh, it is. It is. And they've been putting a lot of resources into those areas, so it's good to see it paying off. And think about it, like personalized medicine, point of care testing, early disease detection, all those trends in healthcare, those are areas where Thermo Fisher is really well positioned.
Yeah, for sure. Long-term growth potential there.
Yeah.
What about their full-year revenue for specialty diagnostics?
Well, it was a bit more modest, 2% for reported revenue and 3% for organic revenue, but still, better than the overall market.
Right. Okay, so that leaves us with just one segment left, right?
Yep, laboratory products and biopharma services. This one saw 4% growth in both reported and organic revenue for Q4.
Not bad.
Yeah.
Especially considering, all the talk about a slowdown in vaccines and therapies revenue.
Yeah, exactly. But their core businesses, those are bouncing back nicely, especially the pharma services business and the research and safety market channel. So as the biopharma industry, as that continues to recover, Thermo Fisher, they're going to benefit.
Gotcha. And what about their full year results for this segment?
Well, they were a little quieter. Reported revenue was up just 1%, and organic revenue was pretty much flat. But they're still maintaining profitability. Adjusted operating margin was steady at 14%.
Okay, so navigating a tricky environment, but still holding their own.
Exactly. They're all about efficiency, right? Controlling those costs. That's key in a market like this where things are a bit, unpredictable.
For sure. Okay, so we've gone through all the different parts of their business. Now let's talk about their outlook for 2025. What are they expecting for the year ahead?
All right, so this is where things get interesting. Their guidance, it always gets a lot of attention. It gives us some clues about how they see the future playing out.
Right, right. So what are they saying for 2025?
Well, they're projecting revenue to be somewhere between $43.5 billion and $44 billion. That's an increase of 1.5% to 2.5% in reported revenue.
Okay, so continued growth, but maybe not as fast as some people might have hoped.
Yeah, but there's a little wrinkle there. They're expecting a 1.5% hit from those foreign exchange rates. So if you take that out of the equation, their revenue growth actually looks a bit stronger.
Ah, okay, so always got to read the fine print, right?
Yep. And when you look at their organic revenue growth, the stuff that excludes acquisitions and those currency fluctuations, they're projecting that to be between 3% and 4%. That's pretty healthy considering, all the uncertainty in the economy right now.
Right, right. So they're confident they can keep growing their core businesses.
Exactly. They're not just relying on buying other companies to boost their revenue. Okay, so that's the top line. What about the bottom line? Earnings. What are they saying about those?
Yeah, that's what investors really care about.
Right. Well, they're guiding for adjusted earnings per share to be between $23.10 and $23.50 for 2025. That works out to a growth rate of 6% to 8%.
6% to 8%. Not bad at all.
Yeah, it shows they're committed to, delivering value to their shareholders. They're not just focused on growth for the sake of growth. They're managing their expenses and they're making sure their profits are growing too.
Okay, I like the sound of that. So what are they basing this guidance on? Like, what are their assumptions?
Well, they're cautiously optimistic about the overall industry growth in 2025. They're expecting things to pick up as the year goes on.
Okay, so they're betting on a continued recovery in the life sciences and healthcare sectors.
Yeah, exactly. And they're also factoring in, some leftover impact from the pandemic. They're assuming a 1% drag on revenue from that. But they're basically saying they don't expect any pandemic-related revenue in 2025.
Right, which makes sense at this point. But what about all the economic uncertainty? How are they accounting for that?
Well, they're being careful. They're assuming there might be some impact from potential policy changes and that 1.5% revenue hit from currency exchange rates. So they're not ignoring the risks, but they're not letting it stop them from making plans.
Makes sense. Okay, so they've got their projections. Now, what about their plans for using their money?
Well, they've already started buying back shares. They did $2 billion worth of buybacks in January. That's a pretty big move.
Yeah, it is. Why would they do that?
It's a sign of confidence, They're basically saying they think their stock is undervalued, and it's a way to return value to those shareholders.
Okay, I can see that. And they're also planning to pay out dividends, right?
Yeah, about $600 million worth in 2025. So they're rewarding shareholders in a couple of different ways.
Nice. Now, one thing that caught my attention was their outlook for the first quarter of 2025. They're projecting flat organic growth and flat adjusted EPS growth. That seems, a little underwhelming.
Yeah, but don't read too much into that. It's mostly due to some timing issues that are specific to that quarter. Like they'll have 2 fewer selling days compared to last year. And there's some stuff with the timing of their services revenue. It's not necessarily a sign that their business is weakening.
Right. Okay. So the big picture is still positive.
Exactly. Focus on that full year guidance. They're expecting solid growth. Their margins are going to expand, and they're confident they can handle any challenges that come up.
Yeah, that makes sense. Okay. Before we move on, I want to touch on one more thing.
Yeah.
Their free cash flow. These guys are a cash-generating machine.
Seriously, it's one of their biggest strengths. In 2024, their free cash flow was $7.3 billion. That's huge.
It is. So what are they doing with all that cash?
Well, they're using it wisely. They've made those strategic acquisitions. They're returning money to shareholders through those dividends and buybacks, and they've kept their balance sheet healthy. That's the formula for long-term success.
Yeah, absolutely. Okay, so we've really dug into the numbers, looked at their guidance, and talked about some of the bigger trends and challenges they're facing.
Yeah, we've gotten a pretty good understanding of where they stand right now and what their prospects are for the year ahead.
Awesome. So, are you ready for part 3? We'll wrap things up with our final thoughts. And, of course, we'll have our This Is Not Financial Advice segment where we come up with a wild trade idea. Always a fun one.
Oh yeah, always looking forward to that. Let's do it.
Okay, so we've gone through pretty much everything in this earnings call, right?
Yeah.
All the financials, their plans for 2025. But before we wrap up, I want to kind of step back and share some final thoughts. And then, of course, we got to do our This Is Not Financial Advice segment, right? Always got to throw out a crazy trade idea.
Oh yeah, that's the best part. What crazy idea are you cooking up this time?
Well, hold on. First, I got to say, overall, I'm feeling pretty good about Thermo Fisher. I think they're really well positioned. They're dominant in their space, and they're doing all the right things.
Yeah, no, I agree. It's not just about the numbers, right? They're innovating, they're making smart acquisitions, and they're actually, trying to be a responsible company.
Right, exactly. And that free cash flow, that's a big deal. Gives them a lot of options.
Oh yeah, for sure. They can invest in growth, they can reward shareholders, they can do pretty much whatever they want.
Exactly. So yeah, I think they're going to continue to do well. But okay, now for the fun part, the This Is Not Financial Advice segment. So I was thinking, what if Thermo Fisher went all in uh, on personalized nutrition?
Personalized nutrition. Okay, that's interesting. What do you have in mind?
Well, think about it, right? They've got all this expertise in genomics and proteomics.
Hmm.
They could use that to like create custom supplement plans
Hmm.
based on your individual needs.
Oh, okay. I see where you're going with this. So like they analyze your DNA, your blood, maybe even your gut microbiome, and then they tell you exactly what supplements you should be taking.
Exactly. And they could package it all together, right? Partner with some wearable tech companies, maybe even create their own,
Yeah.
and then boom, they become like the one-stop shop for personalized health.
I mean, that's a pretty compelling vision, and it fits with all the trends we're seeing, right? People want personalized solutions. They want to optimize their health.
Exactly. And Thermo Fisher, they've got the tools to do it. They could offer like DNA testing, blood analysis, you name it. And then based on the results, they put together a custom supplement plan.
They could even they could even deliver the supplements to your door. Subscription model, of course.
Of course,
Yeah.
make it super convenient. Now, obviously, this is all it's all just hypothetical.
Right, right. But it's fun to think about.
It is, and it's not totally crazy either, right? I mean, it's definitely within the realm of possibility for a company like Thermo Fisher.
Yeah, it just goes to show like how much potential they have. They could really disrupt a lot of different industries.
All right, well, that's about it for our deep dive into Thermo Fisher Scientific.
Yeah, we covered a lot. Their financials, their strategy, even some wild speculation.
Hey, got to keep things interesting, right? But as always, folks, remember, this is not financial advice. Do your own research before you invest in anything.
Absolutely. Don't just take our word for it.
All right, thanks for joining us on Talk Tickers. We'll catch you next time.